And we're live. Hey, happy Friday, everyone. It's Brian with Tiny Crypto Blog. Hope you're doing well. Hope you had a good week. This week, it's going to be more commentary on anything. I'm starting rather late. It's 8:54 Central Time. It's just one of those weeks, like a lot of weeks. But this week, one of the things that was coming to mind is something that seems to be coming up and something that we often need to face, especially if we're very vested into the crypto space. And that is surviving a bull market, not a bear, but a bull market. If you are a veteran who's already been through a bull market and a bear market cycle, then this is, or more than one, this is a reminder to you to not let yourself get caught up or swept up by all the FOMO and excitement as prices go back up. You've been through this, and if you made it through the bear cycle, then there's a good chance you've developed the discipline to not let your emotions get swept up by the excitement of rising prices, by number go up, by any holdings you have, any bags you have going up, not getting swept up in the euphoria and the excitement as tokens and coins are going up, and all of a sudden everyone's jumping into this platform token or that platform token or this DeFi token or that DAO token or whatever it is, or this new meme coin or that new meme coin. You've been through that. You've been burned. You've gone through the madness of constantly checking prices. And if you were like me, you've gone through the cycle of having all your emotions raised up and then beat down and just smacked and smacked and smacked over and over again as you go into the downward cycle of prices and then go through that long grinding sandpaper stage, just wondering when. And if you're in for it for more than just the money, for the freedom tech, for how it affects human interaction, of what it can enable people to do and to make our world literally a better place, the prices don't matter as much. And with each cycle, each successive cycle of up and down, it becomes a little bit easier. As far as me, I followed Bitcoin as far as just like high level stuff, not really getting into the weeds. It wasn't until 2017 that I really got into the weeds at the beginning of the year, and then went through the whole euphoric upcycle and then through the grinding bear market of 2018 and 19. And then going back into the bull cycle of 20 and 21, and then going through the grinding bear cycle of 22, and the sandpaper stage and slowly building stage of the beginning of 23. And if you are a long-time veteran, you know these things. You know that these price cycles move. You've learned to divorce yourself emotionally as much as you can from price movements. And you look at them in a much more analytical light because you understand what makes token prices move. You probably have a good understanding of fundamentals, of understanding the protocols, of understanding how all these different platforms are evolving, the layer 2s, layer 3s, and the whole 9 yards. And if you're new to the space, and if you joined either in the bear of 21, 22, or you are, it started coming apart in 21, or you just joined in 23, this is a very exciting time. Let's bring this up. Because just this past week, prices went on a tear. Let's just look at Bitcoin. In 1 week, we went from a 51,000 price level up to 62. That is a huge jump, 22%. It went up by 1/5 in a week. That's crazy. As someone pointed out in a tweet, about a year ago, we were at the $17,000 mark. And this week, our 1-month candle is an 18,000 upward green candle, meaning for trading up or down, looking at a range of movement. And that's what happens in a bull. One of the things I'm curious about, and if Keith at Crypto Coin Mindset was going to have his crypto on the rocks today, which he couldn't, for whatever reasons, but if he did, I would have hopped down. And one thing I wanted to ask him was, I'm very curious what happens behind the scenes when these prices take these huge jumps like this. Obviously, there's some sort of trading going on, and obviously there are some people, some whales that have the ability and the leverage to really move prices, to clear out options contracts and any sort of derivative contracts on the price. People sell them, and then you get huge spikes, either up or down. And I'm curious who these players are and what the strategies and the purposes, other than making a buck on swings, getting in and out of that, is. If there's more to it than that, or if it's simply that. Because it's not going to be the institutional buyers like the BlackRocks or the ETF funds. They're not. I'm going to say that most of their purchasing, I know they do go through broker dealers, but I'm going to guess that the mechanics of most of their Bitcoin purchases, when they need to acquire more, is through the over-the-counter market, private deals. Maybe if they were smart, they'd have contracts worked out with large-scale miners to either have options of purchase or to make regular purchases with them, in which case those prices are negotiated and the trades are executed off the market. They're not executed on the retail exchanges like your Coinbases, your Krakens, your OKXs. That's all the retail market, whether it's big dollar or small dollar. And that's what moves the prices. These things, they're done at a fixed rate, whether it's a certain percentage below spot or at a pre-negotiated price. So I'm curious to know the mechanics of this. But we have the situation where, still sticking with the people that are new to the space, pardon me if I call you newbies. It's not meant in a derisive way. I'm a gamer myself, and newbies is just a way to describe you. So no offense meant, no offense to be taken. But looking at Bitcoin, the price movements, here we were at 39,000 near the beginning of the year. We were under, in the 40,000 range. It got as low as 40K. Now we're up in the 60s. So now that this price action is happening, what can we expect? Let's make this bigger here. We're going to go back in time to 2017. When the price was down in the thousands. It's up to 2,000. We're going through the summer. The big chatter that summer of 2017 was, are we going to hit Bitcoin 5,000? Because that would have been an all-time high. We had the big drawdown from Jamie Dimon and China FUD in September. And then lo and behold, I believe it was in October. Yep, hit 5,000. And it was in dramatic fashion, from 48 in just in a matter of days to almost 58. Then you had your pullbacks. It got up as high as 7. People were euphoric. Then you had the pullback. And I remember as far as top 50, maybe top 25, it started with Dash going up. There was some sort of recommendation for like a Florida Garden Club, Retirement Club, or something like that, where they're recommending Dash. And I think part of what played into that was you could purchase a master node, which a master node is sort of like a node that performs certain protocol functions above and beyond just simple block confirmation. And there'd be, I had to stake so many coins and have rewards. Well, anyway, that started the pump, and then everything else just started to follow. And you were going into the eights. And then it was, oh my gosh, what happens when, we get to here for Thanksgiving? Nothing. But it kept going. And I remember the articles where day after day it was pumping by 1,000. I remember there was December 5th to December 6th. It pumped almost $5,000. It pumped almost 25%, if I'm doing my math right, in a day. I remember seeing I think it was a CoinDesk article. It says, essentially, and I saved a screenshot, as the price of Bitcoin goes to 14,000, as you write article about price of Bitcoin going to 13. And it was just crazy. And then you had your eventual peak. And this was around the time in December when I remember Litecoin finally went over 300. And then you had a massive pullback up from the all-time highs of 19 down to here. There was some recovery going to a higher high to 18, but it was too late. It had happened. The bear ensued, drops down to 6, recovery at 10, and then we start going sideways. And it just drops and goes and goes and goes. Eventually, we were holding at 6, and then in late 18, we had the drive-by shooting that took it down into the 3s, which for anyone who was stacking or earning any sort of Bitcoin rebate rewards, like on Lolly, that was a great time to be getting rebates. And then we had, I forget what the report was, finally in early 19, huge psychological jump. Prices turned around, went, 4,100 to 49. And that started the slow psychological shift. And then we went into 2019. We're back up in the teens. We had our 2020, everything's dying, down to 5, built up. Then we find out about MicroStrategy in October, and then upward momentum, all-time highs again. Pullback, eventual recovery, hit the new highs at 67,617. And then with pullback, and then in 2022, we get Terra Luna and FTX, and pardon my language, and then everything went into the shitter. Took us to where we are in 2022, 2023. We've got the recovery up in the 16s, some recovery. And then we get the Bitcoin rumors of the ETF, and that pulls us up to where we are today. So, with all that said, where does that leave us right now? Oh, no. I apologize for that. I did not have the proper screen going. I had the screen. Holy moly. Gosh. Anyway, Now that we have the proper screen, I'm going to take you through the journey really quickly. 17, prop it up, the drop, the pop, the grind, the drive-by shooting, the rebuild, the 2021, the 22, Terra Luna, FTX, and then we're back today. Now I got to tell you, I really apologize for that gaffe. I mean, I think this is going to be my low point as far as videos go, where here I'm narrating and it's the same screen. My gosh, I'll have to make a note to fast forward. So that brings us to, where are we today? You know, we're looking at prices just Bitcoin, like all the other altcoins. Let's go back here. We need to get to, let's say, Solana. Where's Solana at? Solana, move to share this tab, maximize this. I mean, look at this movement, 23. It's gone up multiple times since October. And that's incredible price movement. If we're going to overlay that, so where does that bring us? That brings us to, you know, we're going to be moved by euphoria as we're seeing these price movements. If we've never experienced price movements like this before, we're going to be driven with FOMO, fear of missing out. Like, oh my God, the price of this token's going up. I'm going to miss out. It's going to get so much more expensive. It's going to go up 50%, 100%. It's not affordable anymore. But you're only seeing that because you're giving it a starting point. Let's go back to Bitcoin here. I want to share this screen. We are going to go to present and share a screen. I want to share the Bitcoin screen. If you look at Bitcoin, let's look at it on a very long-term scale. Back here, this is something just to keep in mind. See this price movement? Huge spike. I remember this. This was going from the hundreds, and in the course of a few months, it spiked up to 1,000. Look at that spike. If you were watching it down here and you saw it going up here, you're thinking, oh my God, I missed out. And it's just the same as it was in 2017. This could easily be, instead of $130, $1,300, spiking up to 17. And that's exactly what happened. You get another spike. It starts down here, rises up there. Starts down here, rises up there. Starts down here, rises up there. Make sure we're getting this right. Yes, right and correct screen. But when we look at it on a long logarithmic scale, you get the result of higher highs, higher lows, and it moves in a slow upward wave. And when you think about the technology, that this is something that, one good analogy was the internet came about real into a usable fruition in the 90s. It was the start of web browsers, HTML, input output, TCP, oh boy, TCP, ICP, I think that's what the protocol, the language is called, that enables for internet communication and data packets. All of these innovations, and if you weren't alive during this time, all these innovations made the internet go from being simply message boards and then static web pages that took forever to load, static web pages that companies or people would post, to enabling more levels of sophistication of utilization, to the point where you could post videos, you could create alerts, email alerts, but still alerts, where if you have an account, a website can give you automated email alerts. You could make purchases through the internet, through commerce portals. You started getting social media, which allowed for interaction. And over time, the hardware, the network grew and grew, just like a root network, just like mycelia. It started to spread. And as the usage grew, like a tree grows, the root network, the hardware, the underlying nuts and bolts of the internet expanded and grew. And so did the data capacity, and so did the cabling and the wiring and the fiber optics and everything involved. The being able to use all the cell phones, and then smartphones enabled more usage and more engagement and grew the ecosystem. It was pointed out, smartphones, specifically iPhones, created a market that prior to its existence did not exist, and that's $1 trillion app market. How many people are working in companies that generate revenue from apps, aka programs for all you old-time folks like me, that run on the internet, that run on specifically on these devices? It didn't exist. Look at how we use a smartphone today. We can use it for buying and delivering our groceries, for getting a ride, ordering food. We use it in so many ways. And it took, and think about Amazon, think about Microsoft, think about the companies that grew into these tech giants that 15 years ago, they were not the giants they were. They didn't utilize or draw as many people together as they do today. These companies didn't exist 15, 20 years ago because you didn't have the layers of technology, nor the nuts and bolts, the network, the physical network, nor the user base to support it. You had Amazon in the early days, and that grew with the internet. And it's the same thing with Bitcoin. It's the same with a lot of smart contract platforms. We are still early. Yes, you could get in and buy Bitcoin at 60,000 instead of 70,000, or buy it on a pullback at 40,000. But in 10, 15 years, the amount of utilization, its principles and its characteristics, and same with a lot of the other smart contract platforms and the other tokens and blockchain ecosystems and protocols, the things that give them value today are only going to grow. Assuming that there's talent, the potential of how large of a pool and in what ways we're able to use these protocols is only going to increase. And we're going to see the giants slowly start to grow over time. And there's going one day, looking back at buying Solana at 125, or Cardano under $1, or Ethereum under 5K, or Bitcoin under 60K, we'll be looking at saying, buying pre-split Microsoft stock, saying, are you really going to care if you bought Microsoft stock at $5 or $8 when at a pre-adjusted price it's worth thousands today? At the time, it was a big price move, but in the long picture, the long perspective, as we have here on a long timeline, there's no rush, because maybe for a certain price point, we're missing the train. But from a technology adoption standpoint, from an implementation, from a usage standpoint, we're still, as you hear on Peter McCormick's podcast, we are still so early. Not even 5% of the human population uses these protocols. They might own tokens, they might trade them, they might be going after Doge and the meme coins, they might have exposure through a Bitcoin ETF now. But things are so early for where this technology can go that I would say be mindful of the quote. And I'm going to bring up an image for it because I think it is appropriate. Oh, I want to find a good one. It was 15 years. Okay, they're calling it 20. I'm saying it should be 15. The best time to plant a tree was 15 years ago. The second best time is now. And if there's one thing I've learned in the crypto space, is that that is very true. If you start investing yourself, and again, advice here, not financial advice, do your research, know the risks. If you invest, start getting yourself in now. If you have an entry point of today, that purchase, whether it's $5, $50, 500, 5,000, you are purchasing Bitcoin and a quantity of Bitcoin at a price level that people after you, as each day goes by, has less and less of a likelihood of getting into or of getting in at. Their price point is going to be, if today you get in at 60,000, let's say you start doing a dollar cost average, you get in at 62,000. Well, a month from now, 6 months from now, a year from now, the people who are just coming in, they may never have an opportunity except in the next bear market to get close to 60,000 for an entry point. Their best option might be 75. Their best option might be 100, 125, 150. They might have to wait a year and a half for a bear market to even get close to the 5 digits again. The whole point is, every place where we're at, this still applies. We're still early. You haven't missed out. If you really, really feel like you should be doing it, but you're hesitant, just get off zero. Just get off zero. Doesn't matter what it is. Doesn't matter if you buy $5 through PayPal or Venmo. Doesn't matter if you do it through Robinhood. Doesn't matter if you even go and just open a Coinbase account and you buy it that way. However you do it, get off zero, get a starting point. Once you, just like drinking, once you break the seal, it's a lot easier because you're invested, and it's a lot easier to go forward. You've gone through that uncomfortable unknown, and now it's easier to go through. It's easier to continue along the journey. And if you're one of those long-time veterans or short-time veterans, whichever, this is all part of things. And if you wish to keep accumulating, I'm thinking about Bitcoin, but any protocol really, now is the time. Just keep doing it. Just keep stacking. Keep stacking and keep educating yourself. Keep telling yourself, Be mindful, do your research, understand the changes going on in the space with laws, with usage, with layer twos, with layer ones, protocol changes, development teams, and just keep tabs on these things so you know, is this project that I'm investing myself in, is it still worthwhile? Should I be more optimistic? Do I need to exercise caution because things are getting kind of stale? These are the things you need to think about. So don't let the prices get to your head. I mean, even me, it's easy to get swept up with the excitement. And it's fun because it's fun. It's fun to be winning. It's fun to win. Especially in this day and age, it's like, well, hell, I'll take any freaking thing I can get. But it's important too to keep a level head and not let your emotions get the better of you, because they're going to start making decisions based on your emotions and not on the underlying fundamentals. In fact, I have a video. I'm going to bring this one up. A little bit of a reminder here of what you should keep in mind. I'm going to use this to close out. Made a video, I think it was last year. Where are we at? All right. We are going to view this on YouTube. Thank you very much. Want to make sure we got some worthwhile resolution. All right. So let's bring this up. Present. And here we go. So think of Bitcoin as like a painting, a very simple painting. It's got 4 black edges and it's got a line. And this line is adoption, implementation, awareness, innovation. Ever since its inception, it's just been an upward thing. The more people come across it, the more they innovate, the more ideas they get, the more become they aware of it, and it just compounds. And now, take all of the noise and drama and discussion and everything you've ever heard about Bitcoin. It's a fad. Only criminals use it. Energy usage. Oh, we're going to the moon. Oh my God, Bitcoin's dead. Oh my God, I'm a millionaire. Oh my God, I'm completely wrecked and I'm devastated. All the drama, all the noise, anything you ever heard on social media, on chat boards, on traditional media, everything. It's like going to a paint store, taking the lids off of every single can of paint in that store and dumping it on this canvas. All you see is tons of noise everywhere, just this cacophony of noise. But underneath it, you have that line. And all you need to do is focus on the things that relate to that line. The commentary, the philosophy, the things that are being done to actually innovate, implement, create new technologies, change the way humans interact with each other on different levels, how it changes our frame of mind as the technology makes us see things differently, and ignore all of the noise going on. If you focus on that line, you'll be fine. Focus on the line. Focus on the fundamentals. Don't let the noise, including huge pumps and dumps in price, get the better of you. Now, one more thing I'm going to share. That's it for the crypto stuff. One more thing I'm going to share. I'm going to have some fun. Where we are with the present. I wanted to share see if I can bring it up. I'll save it for later. I'll save it. I'll save it. I'll save it for later. So with that, be mindful of the noise and just remember the little line. So that was your lesson today for surviving a bull market. With that, thanks for watching along. I hope you got something good out of that. I can follow along on all the social media sites and video sites listed in the show notes. And with that, be well, everyone. Talk to you soon.